In today's video, we are going to take a look at everything DXY, guys. We're going to talk about some key levels to watch going into FOMC. I'll also share where I think the dollar could be going as we head into 2024. All right, hope everyone had a great weekend. So I was out a lot last week because I was sick. I'm feeling a little bit better, still not 100%, but doing a lot better than last week. Okay, so looking here at the DXY, the US dollar index, obviously we have the market coming off of this 105.80 area that we talked about at length while the market was above this back here in October. So this market is going to matter when you're trading the euro, the pound, even equities to some degree, although right now I do think that we're getting somewhat of a blow off top from equities, despite the fact that the dollar is just sideways. So looking here at the DXY, going into FOMC this week, we do have the market just moving sideways here. This level right around 103.50, this is the 2023 open. So this is going to matter for the dollar as we head into FOMC, because clearly the market is holding above that right now. You can see where last week did test that. We got a wick below. Okay, so the DXY swept that level, and so far it is holding above that. Now, at the same time, though, you also have the DXY coming into some resistance based on this high right back here around 104.20, all the way up here toward 104.50. So this region up here is going to be resistance, and we have support down here for the DXY. Now, knowing what we typically get from FOMC, I would not be at all surprised to see one of these areas swept following that volatility. So if we don't get a liquidity sweep before FOMC, what I would be looking for is either the DXY to come up here, sweep this liquidity, and then come back into the range, right? Or we get something down here into 103.50 first, following FOMC, sweep the lows down here, and then rally from there. All right, because again, typically you do see when a range develops like this, going into FOMC, typically you see one of these two sides swept before the market decides which way it's going to go. Okay, now the DXY does have a chance for a bullish reversal pattern, because if we go here to the 4-hour time frame, what you're going to notice is that it did come off of this trend line right here. So we have the highs right back here in November, and you can see we're consolidated right before the breakout. So with the breakout, rounded retest, and so far that level is holding as support. Now you can also see where on the 4-hour time frame we do have a potential inverse head and shoulders. Now the key for this pattern though is going to be a sustained break above this area up here. And you have to be really careful trading ahead of events like FOMC. In fact, I don't recommend it. If you're 24 hours away from an event like FOMC, trading something like the euro or the pound is just asking for trouble in my opinion. So this right here could be an inverse head and shoulders, but again, the market has to get above this area up here. If we see a sustained break above this, that pattern is confirmed, and the objective is up here around 105.80. Now, alternatively, if we see the dollar continue down here, okay, either sweep this area following FOMC or just continue down here, take out this low, then I think the odds of an inverse head and shoulders are a lot less than if we see the market hold above this recent low down here, just below 103.50. Now, if we look at the DXY, going out here toward the daily time frame, okay, so taking a big picture view of the dollar, and this is going to be significant because anytime you're closing out a year, heading into a new year, it's important to take a step back, look at where the market is, and try to figure out where we could be headed in the new year. So what I think is going to be significant for the DXY is going to be 105.80. And the reason for that, if we just go back here and look at the price action before we got this recent rally, okay, the price action back here told you that the market was range bound, right? So it was really just kind of locked in this range for quite a long time. And then what you'll notice is that this rally, okay, this recent rally occurred following a fake out. And we talked about this a lot here on this channel, where we got the close back above, retest as new support right here, and this fake out triggered an extended move in the opposite direction, as they often do. Now, if you look here on the weekly time frame, it's a lot easier to see 105.80, but if you look here at the weekly, you'll notice that we got the exact same thing on the other end. Okay, so this down here became a fake out, reclaim right here, retest. Now look what happened up here at 105.80. This was the range highs. Okay, we got the close above throughout all of October. Notice what happened. We got the close below, retest as new resistance, and the sell-off. So the big question now is, in 2024, do we see the DXY just continue lower down here toward the 101 range lows? Because remember, that's exactly what we got back here, right? We got the move up here toward the range highs following that fake out down here. So now that we've had the fake out above those range highs, do we get the move back toward 101? And I think this is what it's going to come down to, 105.80. Okay, if we see the DXY start to reclaim this level into the end of the year, all right, if it starts trading back up here in this area, then I do think that's going to be bullish for the DXY into 2024, because this area at 105.80 is now the level to get back above. Now, if it doesn't, and we see the dollar close anywhere down here within this range, then I do think the odds of a retest of this level down here at 101 are much greater, because the dollar would have failed to close back above the 105.80 area. Okay, so we can kind of boil that down to, close up here into the end of the year. I think we see 109 to 110, close anywhere below that. Okay, I think that we do see a run at those range lows around 101. All right, so all that's going to matter when you're game planning for the new year. But as far as the short term here, again, the DXY does have the potential for a bullish reversal in the form of the inverse head and shoulders, but it does have to clear the 104.20 to 104.50 area. The objective would be 105.80. If we see it take out these recent lows, though, and start to close below that 2023 open at 103.50, then I think we're looking at a run at those recent lows around 102.60 and potentially lower. Okay, so a range-bound market right now as we head into FOMC. In my opinion, the best way to trade the dollar is to wait for FOMC, wait for either shorts up here to be liquidated or longs down here below that recent low to be liquidated, and then look for opportunities following FOMC. All right, that's it for today's video. If you do want to join the VIP group, I am running a 50% discount right now. See the link in the description of this video for details. You'll get access to daily videos, exclusive chart setups, and you'll also be able to see my trades in real time. Plus, you're going to get access to the course that's coming out within a few weeks. Trade well this week, and I will talk to you guys again tomorrow.